Thanks, Alistair. Thanks for coming out this morning, even though some of you may have had a late night. I was too tired from my jet lag, so I went right to sleep. Now, I think I just want to say, like, as a start here, I don't know how good my prediction is going to be because looking back 10 years in 2010, and I'm going to do that, I don't know that I really predicted much of anything that actually turned out to be in 2020. But nonetheless, you know, it's an opportunity to come up here and sort of talk about some of the trends in the industry, where some things might be going. So, as I said, I wanted to start with, you know, where were we in 2010? So everyone's memory is a little bit hazy. I managed to use the internet to sort of, you know, check some of these things. But when you look at, you know, where oil prices were, what was the market cap of Bristow, I was gonna make an effort of trying to add up the values of all the sort of major helicopter companies compared to now. With CAC, I took a little bit of license given the first reserve acquisition was 2008, and CD&R in 2014. There were no super mediums, maybe on the development board. There were none of the new gen lessors that Clark managed to put in business when he was at CAC. GE was I think the largest provider of lease financing. It was all done through like the commercial finance group, and it was traditional, I would say, finance leases that technically were operating leases. ERA had a nascent leasing business, but it was not sale and leaseback. It was really just renting out its fleet. Debt was, I think, limited if you were not an operator. Certainly there were no lessors to get financing, but coming off of the global financial crisis, helicopter financing was more limited, which is ultimately what led, I think, to Milestone and some of the others. My recollection was Milestone was formed in 2010. They hadn't done any transactions, but that was the sort of, their initial, I call it pre-launch. Assets traded for premiums to acquisition cost. We bought a lot of aircraft at ERA, as did others, and you know, you found the opportunity to benefit from your slot scarcity. If you were looking for S92s or 225s to play in that oil and gas space, it was a differentiator. You had large operators taking big order positions and trying to sort of keep out some of their smaller competitors because of it. And then I had just pulled together a few headlines because I was kind of curious myself as to sort of what was the big news back then. Now, if you look at today, oil's down to $53. Maybe that's not such a shock. It's a cyclical market. Certainly, oil's been, you know, below that over the recent history as well as sort of the longer term. Now, Bristow went to zero. I'm picking on CAC because they're one of the big operators. I don't know what their equity value is, but there is a lot of equity value across the industry, not just the operators, obviously including Waypoint, that was vaporized from this cycle. And I don't think people would have been putting their capital into this business if they would have had the crystal ball of what was going to happen 10 years out. Dozens of super mediums in service. The S92 and the 225 are definitely not hot aircraft. The overcapacity is still there, but even, you know, absent the overcapacity, those are not necessarily the aircraft that operators are going to be looking for in the future. As I said, the new gen lessors are becoming the no gen. Waypoint's gone. Lobo, as I understand it, equity is out. The assets are going back to the banks. The lessors that were sitting up here, Crispin, maybe Stephen was sort of joking with, you know, you're going to be working for him maybe one day, but there may be more consolidation. And even though, you know, when you look at what the new gen lessors were doing, you know, part of the business model, and maybe not for everybody, but it was, we're going to take these order positions and we're going to provide that to the industry because it's more efficient than what operators are doing. I still think that's the case. It just may be that nobody really needs order positions, period, operator or lessor in the oil and gas industry. GE is still the largest, and while I know Pat said they've put out a lot of capital, and I've no doubt that they have, and they've done some very big deals with their order book and still delivering aircraft that can come out of there. But I don't think that you see a lot of what was the reason for Milestone and Waypoint and Lobo and LCI to get started, which was providing capital to an industry that needed it. And when you look at how Thora and some others have been able to come into the space and raise some new money, I think it's partly because they're seeing deals to do that the big guys don't want to do. Debt's, again, limited. I mean, I think there's a couple of lenders here, they're going to talk about this later. Nobody wants to do oil and gas. Maybe that changes over time. And assets have gone from trading at a premium to trading at steep discounts. Way less than appraisals in some cases. Maybe that's because the appraisals are too high, not really valid. But also in some cases, less than part-out value, which is why there's an opportunity to part out aircraft. So what happens 10 years from now? I think the surplus fleet will be gone. It'll be scrapped. It'll go back to work. I mean, the question was how many aircraft have been scrapped. I don't know that anyone really knows, but there are 92s that have been scrapped, 2 25s. We've done lots of 76s. I mean, this is happening. 2 years ago, I think Dan Rosenthal was up here talking about that it needed to happen. So now it's happening. Consolidation, I think, reduces the big five further. Whether that's by big five, I think everybody knows who that is. But I think while that happens, the regionals continue to grow. And if 2 or more of these regional guys get together, then you have another global rider, and you still have these sizable local operators that have the potential to grow into to bigger operators. I can recall my time at ERA that NHV was sort of joked about as this little company that was bringing a Dauphine to the North Sea, and the Bond brothers kind of thought it was more an annoyance than anything else. And then you look at them today, they're a very sizable operator in more than just that market. The life limit on the S-92, which I had not realized, had not really focused on until it was raised at HAI, if that stands, my prediction in 2020 is that 2030 is this going to help 189s and 175s, because those aircraft are going to need to be retired, and maybe the alternative is a 525, maybe the alternative is a new S-92, but as Stefan said when he was up here talking about the 175, there are real economic advantages when you compare, new for new on the super medium aircraft. I think the 225, even if it's not coming back to oil and gas service, and again, I may be wrong like so many other things, but I think it'll be flying for more customers than are there today. I think leasing will be a mainstay of the industry. I think when orders do return from the manufacturers, it's more likely to be made by lessors than operators, and I think that does make more sense. I'm not saying that anybody needs to go out and order aircraft, and I think, frankly, that would be a little bit scary if people were looking to do that, but when it happens, I think the lessors are better positioned to redeploy these aircraft across, a broader market space. I think the OEMs lose their parts monopoly. I mean, there have been providers of PBH beyond the OEMs, but given they continue to move prices up on parts and will continue to do that, and it is, obviously their business model, I think it puts more pressure on or creates more opportunity for others in the industry to PMA alternative parts, maybe not for the S-92, but just like people have done this stuff for 61s and 206s, I think, you potentially see more of that. And then, the part out itself provides alternatives to the OEM part supply. And I do think appraisals will reflect reality. I think if you look at, the numbers that circulate now from the 3 appraisers, they make no sense. And as an industry that is trying to get new lenders and new investors into the space, how you can say the same aircraft, like the S-76C++, is on the one hand worth $1.5 million, or on the other hand, $6.5 million, but yet you can go buy that aircraft for even less than $1.5 million. How can these be out there and anyone use them for anything? Anyway, so I think that's one of the things that changes. Trends, because Alistair asked for me to sort of comment on some of these. Look, who knows, right? Some of this is maybe a positive for growth, some is a negative. Certainly, drones reduce, or unmanned aircraft may replace helicopters for some missions. Automation is already reducing the number of people that need to be offshore, which also reduces the number of aircraft. More, bigger trends, like whether it's a reduction in fossil fuels or the regulatory environment for healthcare reimbursement in the United States changes, which again reduces the need for aircraft. All that's a negative. Now, as long as the supply of aircraft get reduced at the same time, the industry should still be able to make money, even if there are fewer aircraft in it. On the other hand, I think there are opportunities for growth. You know, developing markets that may not have as robust an air medical service as what's in Europe or the United States create opportunities for aircraft. Government outsourcing might create more opportunities, just like they did for Bristow and UK SAR. Wind, I don't remember in 2010 if people were looking at wind for offshore helicopters, but it's a meaningful segment of the market today, and 10 years from now I'd expect it to be more significant than it is. Do operators insist on earning a return? Certainly the Bristow-era merger should change the dynamic in the Gulf of Mexico, where there will be two large operators, and certainly those guys should figure out how to make a return that is, that warrants investing in the business. But when you look at what's going on in some other markets, and I still hear these stories, somebody underbids operator X at what operator X feels are, unsustainable margins. The leasing companies are getting paid. They may not be getting paid as much as they would like, but they are getting paid something for that asset, and they're certainly in a position to raise their prices when they want to, recognizing they've got to work within the confines of their need to keep aircraft on lease and earning money to sort of service their debt. But the operators still seem willing to aim for utilization over profitability. And that's something that I think absolutely needs to change. If the Bristow-era merger produces $35 million in cost savings or more, and Bristow-era decide to give that money to Shell and Chevron and Petrobras, they're not accomplishing anything. So fundamentally that needs to change, and the contract structure needs to change. If oil companies sit there and say, I want new technology, and the operators are willing to sign these contracts with short-term cancellation provisions, they don't really have anyone to blame but themselves for the position that they'll find themselves in, years later. And ultimately the oil companies will suffer for that. Are there any winners? Don't know. I think the end users end up probably benefiting, meaning like the oil companies that are getting service providers taking subpar returns and throwing contract offers at them, they're certainly benefiting. I think investors who buy assets on the cheap, whether they're buying aircraft themselves, leasing companies, operators, if fundamentally the entity they're buying owns equipment and they're paying a low price for that equipment, and obviously there are low prices compared to what was the case 4 years ago, and they're low for a reason. They're not necessarily coming back. There are other low prices where, in a recovering market or when someone figures out how to repurpose the aircraft, they're going to perhaps be able to make some money. So, okay. Al, did I lose my last? Sorry. Well, I guess my time is up if they've moved on to the questions. So, with that, any questions? Crispin?
I think you've done well trying to offend everyone in the audience.
That was a really...
I can hear it, just I'll repeat it.
Ed, that was a really good start to the day. Thank you for that. That was really, really exciting. Two things. Number one, there is an error in your second slide, which you need to do before it goes to the deck, because you've got operators rather than lessors buying aircraft, which was contrary to what you were saying. So no problem with that one.
Yeah, thank you.
But secondly, you really, other than the last closing comments, I mean, the end users, and in particular the oil companies and offshore oil and gas companies, do need to come to the party and be part of the solution. More ways than just getting rid of early termination clauses and so forth. Need to have, as far as I'm concerned, instead of cutting costs, we should collectively try and improve efficiency. From the manufacturer to the lessor, to the operator, to the oil company. I'd like to get your thoughts on that.
Yeah, look, I think you're right. Yes, we should. But they're like, we should do a lot of things. Climate change, world peace. I'm not saying that getting the oil companies to agree on some of these changes would be like lowering our carbon emissions, but I don't know, pretty close maybe. So I just think it's really hard to get folks to do that. So I don't disagree with you. Yes, we absolutely should, but I think, when you look at how the service industry has acted in the past, when there's a shortage of equipment, people have managed to extract pretty good terms from oil companies, whether these were long-term contracts or high rates, especially on sort of the drilling side. I think, the struggle today is a certain amount of people trying not to follow Bristow and CHC and PHI through bankruptcy, and so let's keep this stuff working at all costs. And, it's just fed on by others in the industry. And I mean, the reality is these new investors coming in who are buying these aircraft, 225s at $3 million, S-76s at sub $1 million. For them, S-92s at $6.5 million. So if I buy an S-92 at $6.5 million and I want to charge $90,000 in rent, that's a pretty good number for me. It's pretty terrible for, for Milestone, Macquarie, and anybody else who bought these aircraft at, at $25 million. So I agree with what you say, but I'm not sure that, how that necessarily works in practice. Anyway, anyone else? Yeah, Bill?
Actually, we weren't cutting you off. You still could go on.
Oh, okay. Well, they read what was up there. It's just going.
So, Ed, sitting here today and having been through the whole ride, starting back in 2010 or shortly thereafter when you embarked on this, and given the things that went wrong sitting back in 2010, but now looking forward, what return should an investor in a helicopter require in order to be paid for the risks that are possible going forward? Because we all came into it with a different idea of what return should be in 2010 and shortly thereafter. So what return, if you put your $100 out there, what total return, whatever view you take on residual value, are you looking for?
Yeah, that's a good question. I'll tell you the way I'm thinking about part outs, and that may not really be your question, but look, if we're buying an aircraft, I want to make 3 times my money over a year and a half. That's the part out. That's not going to work forever, but it's working right now because there are so many of these aircraft out there. If I were, looking to collect rent, I mean, the residual value is important, but I think before, residual value was a little bit theoretical, maybe supported by, well, here's all this trading data. Well, now, I think residual value is, what can I sell these parts for? I mean, it's not to say that you don't get that wrong because maybe there's an oversupply and nobody needs all these engines or blades or whatever else, but, when you're looking at, well, assuming I'm buying it at part out value, yeah, if I'm getting 1.5% per month, that's a pretty decent rent level. Especially if, again, you look at where that rent is compared to sort of someone else's, and you've got, the potential for some upside. And forget that. I mean, that obviously has an impact. But that's how I'm thinking about it. And not, look, the waypoint model, you were like everybody else, so that was I don't want to say it was sort of get it fast. I mean, certainly when I went out and raised the money, it was, I want to raise $50 million. I want to go buy aircraft and put them on a lease, and it was doing very much what we were doing at ERA. That shifts, and then you see how much GE is paying for, for Milestone, and it's oh, now all of a sudden we're supposed to do that. And it's easy to sit here and, I mean, clearly it was not, the right strategy, but it was the right strategy for Santulli. He got the timing right. And even, for Waypoint, it almost was sold for a pretty freaking ridiculous number to some Chinese buyer, who's now itself almost out of business. So, I mean, it's just, really sort of bizarre, but certainly when you get to talking about what's going to be like in 10 years, I certainly couldn't have predicted the ride that Waypoint was going to be. Far different than what I set out to do. Anyone else?
Ed, can you elaborate one of your last bullet points on the previous slides, appraisals which reflect reality? I remember it was been 5 years ago, 6 years ago, we were in this building at Helicopter Investor London, and we were having lunch upstairs, and you were telling me, well, appraisals do not seem to reflect reality. You were about to launch Waypoint, and you were telling me, well, this is crazy. I mean, these appraisals are really attractive. This is great, but that does not correspond to reality. Can you tell me why at the time they were not reflecting reality, and why over the next 10 years they will reflect reality?
Well, so I think at the time that you're alluding to my recollection was there were some appraisers that were coming out with values for new aircraft. I think in particular the 139. And I don't mean to be picking on LCI, but like LCI was doing these financings, and they were buying the aircraft from Leonardo. So I kind of knew what they were paying for the aircraft because we had this sort of similar contract, and yet they were getting appraisals that were in excess of that value. In some cases, like far in excess of that value, and they were using that with their borrowing base and whatever else. And to me, it didn't make any sense. Like, yeah, I could see that you could kind of claim a premium, but as sort of somebody talked about the other day, that's when there's actual slot scarcity. There have been times in their industry when there is actual slot scarcity. I sold a lot of delivery positions at ERA, $100,000 down, and we sold it for a $500,000 premium or $1 million. I mean, that has happened, but that wasn't happening at the time. Like, you could show up at Leonardo's doorstep, and if they thought you were important enough, they were going to come up with a position. So I thought those appraisals were just off. Maybe they were 10% off, but they were off. Now, when you look at the spread on something like the S-76, I mean, you're talking about at the low end appraisal, it's $1.5 million, and at the high end, it's like $7 million for the same aircraft. That doesn't make any sense. And then you can go buy the aircraft for less than $1.5 million. So I think maybe I'm wrong. Maybe I should say appraisals should reflect reality instead of will, but I just don't think it's sustainable. Like, how do lenders or auditors accept the fact that this, frankly, bullshit is out there for these numbers? Like, I understand why people want the high number, but like, it makes no sense.
Do you think that sharing information is enough nowadays for market stakeholders for appraisals to be able to really reflect reality? It's so difficult to get reliable data, reliable information on what's going on in the market.
Yeah, well, like I mean, there are people who are trying to do this, and Steve Robertson's done some really good work, and on the S-92, not so much on appraisals, but like, he needs to earn a living. So this data is there if you want to pay for it. I think in the case of valuations, like, obviously people have their own view. I want to buy aircraft cheap, so it's certainly in my interest to have all this valuation data out there, because if the numbers go lower, that's good for me. But if you've already bought this stuff and you're interested in maintaining your book value, not having to take an impairment, it's not necessarily what you want. If you're a lender and you're already exposed, you don't want a problem. So I think there is information that's out there to be shared, but I don't know that people are going to share it because they're going to do what's in their own best interest. Anyone?
Hi, good morning, Ed. We've already spoken. I followed what you said with interest. You didn't mention anything else coming into the super medium market, for instance, the Bell 525. Where do you see that fitting in? Or I'll add the Leonardo 609 tilt rotor coming in.
No offense to Emilio if he's in the room, but like, I don't really. Oh, sorry. I mean, I'm gonna buy my 609s right when we're done. All right. So, no, look, I think I haven't spent much time looking at the 525. We looked at it at Waypoint. I think there's some really interesting technology in there. And what I would say is, if the market were a different market, I think it'd be a really interesting machine, and would give the rest of the industry an alternative. But as I think it was Corey who said it yesterday, like, the industry doesn't need this many choices. So I don't know what happens, because they built it, it's coming, it's going to be available, but unless they do something that's going to make it like, an economic no-brainer, like, who's going to buy it? Like, if you need a replacement for the S-92, yeah, maybe you're going to look at it. You'll consider the 92B, and you'll compare that against the 525, and you'll make that evaluation. But I just think that for recovery in the offshore oil and gas industry, it doesn't necessarily look like it did the last time there was a boom. So the economics may be better for everybody, but it's not necessarily going to require that many more aircraft. And again, as Stefan said, with the mission profile, the super mediums do a lot. So if the super medium's priced here, the cost per hour is here, and the 525 is here, people are going to order the super mediums. If Dell prices the 525 down here, well, then I think they'll say, yeah, sure, I'll buy it. Whether that's sustainable for them to do. Okay?
You've got one audience question.
Okay.
Which is, you've got one audience question. What was the biggest mistake that Waypoint made?
Look, I think my biggest mistake with Waypoint was, at the start, so when I had worked at ERA, I'd worked for one boss for 17 years, and it was generally a good experience, but, and C-Corps was, a little bit unusual, but you basically just ran the risk that one day you woke up and your boss didn't want to do what he had told you he wanted to do yesterday, and you had to sort of change your mind. And the story I always told was starting with ERA, and the initial investment was Texair. It's like before we did it, it was rejected 6 times. So, my boss would say yes, and then change his mind. Now, again, he was really good about letting me kind of come back and, try again. But with starting Waypoint, I thought it would be really beneficial to not just have one sponsor. And so we had interest from multiple parties, and the idea was, let's put a group together with no one that's necessarily going to be in charge. And we had 3 sponsors, and 2 of them were both in charge, which meant they had to both agree on everything. And my initial rationale is like, well, if somebody doesn't want to do something or isn't sure about doing something, well, the other guy is going to maybe have a certain amount of confidence and will end up doing it. And at the beginning, that's how it worked. Our second transaction, I think the aircraft was in Papua New Guinea or something like that. And one of the sponsors kind of freaked out by Myanmar, and the other one was like, oh, we've done telecom in Myanmar, it's perfectly fine. And so we did that deal. But when things started to go wrong, then the sponsors didn't necessarily agree on how to navigate through that. And that probably started right before CHC got into trouble. I mean, that wasn't maybe apparent at the time, but that's kind of when it got started. And I think having that 2 shareholders having to agree, if they didn't agree, I used to always say if one guy says turn left and the other guy says turn right, and we're driving towards the cliff, like, I can't really do either. There was no, real mechanism to sort of deal with that. And I think that fundamentally led to, a lot of the difficulties. Now, beyond that, okay, obviously we had too much debt, we had too much concentration on CHC, we had too much on the S-92, but these weren't like surprises. Like, these were things that before we did those deals, we talked about those risks and decided to take them, from the standpoint of, I don't want to say everybody else is doing it, but, that was the strategy that everybody wanted to follow, and, we, again, I'm not shirking blame here, we all sort of signed off on it. I used to tell some of the guys when they were frustrated, it's like, look, you can quit if you don't like what's going on, or you can get another job. The sponsors can't quit. They're kind of stuck with this until, it's settled. So, anyway, that's